Oh, hang on. There's Kenneth. Kenneth's right there. See him? Alright, well, we're 10 minutes past, so let's just get started. We're recording it, so for everyone that's watching this video, you got 10 minutes of I don't know what. Anyway, here we go. So today we're going to talk about Fibonacci, and it's probably not going to be a whole hour here. So I had a problem with my other trading station, FinFX. The server was out or something, so I'm using another broker here. But let's see. So Fibonacci, basically what Fibonacci is it shows retracements, and it shows retracement at certain pivot levels like 38.2, 50%, 61.8, and so on and so on. And for everyone that's new, a retracement is when you have a downturn, like we have here, and then when the price retraces back up, it goes through kind of an adjustment, and then it starts falling back again. And so you can sometimes use Fibonacci to figure out where is a good entry. And the most famous entries for Fibonacci is again 38.2, 50, and 61.8. Now, just using Fibonacci, sorry guys, I've been up since 4 a.m. Just using Fibonacci without any other indicator can prove a little bit difficult, because you might think you're getting in at the right point when you're really not, and you might be at this point here. You might have gone in at this level here because you thought the retracement was there, and you saw a bear candle, and so you loaded up just to see it go the complete opposite way, and it took you by surprise and blew out your stop losses. So one of the indicators, there are a couple that you can use with Fibonacci, which you should use with Fibonacci, is RSI, and you can use, let's see, what else can we use? You can use MACD, and you can also use moving money flow index, MFI, and so MACD and RSI, relative strength, they show overbought and oversold positions, how the market has potentially exhausted one direction. So Fibonacci usually just shows you levels where things are starting to swing around. Hey Brian. And let me just fix these colors to terrible. Let's see. So Fibonacci, what it does show you is usually resistance and support levels, and resistance and support levels are usually, God, what an awful color, is often, you can often find these support and resistance levels just by doing what I taught you in previous recordings, drawing in your support and resistance lines. Let's see if this is better, a little bit better. Okay, so just taking a Fibonacci from one point to the other, one of the golden rules is if you use the wick, the top of a candle, the wick, then you need to connect it at the bottom to a wick as well. But you can't connect it to a candle, got to connect it wick to wick or candle to candle. I hope that makes sense. Otherwise, you could get some funky readings, and not you might miss out on some levels. So we're gonna just start here. We'll go down to this wick here. So what we see here is we have the peak over here, and then we have a bottom here. We've had some consolidation over here. We're looking at D1, and we can see when we do this, we can see that's a consolidation area. Usually with the load up, market's moving up and down. This is a great area to trade on a small time frame. We're on D1 right now. So again, Fibonacci tool is right here, and not sure everyone knows it, but if you don't see it here on your toolbar, you have to right click, go into customize, and you will have the Fibonacci retracement sitting on your left hand side. Just insert it into your toolbar, it pops right in there, and then you can start drawing it. So we take from the top of this wick down to the bottom where things started going the other way. So wick end to wick end. Alright, so there's bottom. Now we see a retracement all the way up to 61.8, which is right here. And we see a long wick here, which indicate the strength is the strength of the bulls are kind of going away. That's the first indication. And we get a smaller candle next to it, and then we get a huge drop. And then since then it's been dropping. So a 61.8 retracement is going to give you a pretty good entry here, and you're going to have a fairly big drop before the next retracement that we see down here. And in my next Fibonacci show, I'll show you how to configure this Fibonacci tool to show you, if you have a retracement of 61.8, how far down would it probably go most of the times. But it's basically the reverse. So let's see what your question is, Steve. So Tiago, I think one of the things that you might be mixing is, so Tiago saying you get confused on what leg to measure out, pretty much, if I got the question right. So Fibonacci, when you look at Fibonacci, don't think about Elliott waves, even though there's Elliott wave patterns in here. Forget about Elliott wave. Fibonacci is just giving you an entry from where you are today. I can take my highest point on this chart that I'm looking at right now, which is gold, take the highest point over here, and I can pull it down. Since I'm now trying to find out where should I enter on gold, I can pull it down to the lowest end of as current as possible. So there's the bottom, and this is gold. Now I want to enter gold today, and I'm trying to figure out how far is this retracement going to go, because we had a retracement. We bottom out here and we start a retracement. So here we're starting to hit 23.6, which is a great, it's a famous pivot point on Fibonacci. The next one is 38.2, 50, and 61.8. So what a lot of people do here, they don't use an indicator. And anyone that knows me and my brother, we trade naked charts most of the time. But when you do trade with Fibonacci, you should use an indicator. And most of the time, when you do Fibonacci, you should not try to do it on 5 minute or 1 minute. And it just doesn't work well. So I'm looking for an entry, so I'm taking from the highest to the lowest point on this chart. And I don't care about these previous legs. They're irrelevant to me. Now, if I was looking at Elliott wave trading, I would forego the Fibonacci right now, forget about it, and I'd start looking at the wave patterns here. We have 1 here, 2 here, 3 here, 4, which is retracement, and then 5th wave is about to start. But that's another seminar. It's another live event coming next week, Elliott wave. So did that answer your question, Tiago? I think you might be missing that. So right now Fibonacci is only to help find an entry on the chart that you're looking at right at the moment. So not so much about the different waves and legs. So here you just want to take the highest point on the chart and the lowest point on the chart and figure out if you should enter. Now what we see here on these candles, we see some exhaustion, we see long wicks both ways. So it's this could be a consolidation zone. So what we can do is our little famous box again, just pull it back, like some famous traders used to say. Look to your left and see what's happened in the past. So we look at the left, we see that this is an area where you consolidate. Question. Yeah. Because imagine you just have the chart. Yeah, you're right, Tiago. So if I had the chart right now, just from 21st of February to March 31st, it would look different. Then our wave would be somewhere here in the middle of the chart, and that would pull the fib down to here. So I hope that makes sense. Okay, so we're here at 23.6. It's kind of broken through it. We have a breakthrough on the fib. We have a confirmation candle here. I wouldn't really enter here. I would, however, once it comes closer to 38 and 50, I would put a sell stop down here on 23.6. If it broke through 38.2 with a confirmation candle and start heading to 50, I'd put a sell stop on 38.2, and then eventually it will bounce off of either 50 or 61.8. Now, okay, so here's the problem. A lot of people take a look at it and they say, oh, 23.6, I've heard about that Fibonacci level. It's famous, and I'm going to go short all day long. And that might be the wrong thing. So this is why you need an indicator. Another indicator. You can have a money flow index, or you can have MACD or RSI. We're going to start with RSI. We can throw MACD in here and then money flow indicator so everyone can see what it looks like. I use 21 and 79 as two levels. So 21 when the indicator comes down here, then it shows me that it's oversold, and when it hits 79, I start looking at it being overbought. So it'll all make sense here in a second. Yeah, no, Tiago, just you're trading on day one, so I'm looking to. You can, if you want to. Tiago is asking, where should you put your Fibonacci? I mean, where's the right point? You can put it down here to 11th of July if you want to, or you can keep it up here. It's really up to you, I guess. At the end, it comes out to what's your preference. If I put this one here and this one over here, because I'm looking to make a big move, I'm going to sit on this thing for a long time. Right? We saw that on gold here when we went in somewhere. What day was this? March 17th to June 2nd. That's the bounce, and then it bounced up to 61.8 and it turned around, and then it's been dropping since then. So the next logical thing would be to take this peak here, oops, and move it down to this peak here, and at that point we would almost be at 38.2. We tickled it. We kind of had a swing through, and then we went down and Now it's acting like resistance. Whether it's 38.2 or it's 23.6, it kind of still works the same way, because it broke through, it had a spike, it came back down, and now 23.6 is acting as a support. It hasn't come through. If we move the top, it's kind of the same here. It hit 38.2, bounced back a little bit, tickled it, didn't break through, so it didn't hit resistance. So you can move this top around here, and you can see that now when we throw in an indicator, we might see that we're right at an overbought position, and this might be as far up as it's going to go. So if we measure from here, then it's almost a 38.2, or it's a 23.6. The idea is to try to figure out if it's around these pivot areas of Fibonacci. Just because it looks cleaner, we'll put it over here, because then we kind of tickle right up on 38.2. Now, to find out if we should really put in an order, we'll throw in RSI to start with and see where we're at. So again, these are the numbers you can do, 20 and 80, or you can 21, 79. These are representing levels where it shows overbought or oversold, and it looks like this. So here's 79, and here's 21. So when the price is down at 21, it's oversold. When it's up, getting closer to 80, it's overbought, and then you can expect a turn. Now the RSI value I'm using here is 5, so let's switch that over to 14. It's a little bit calmer numbers, but we can still see right here, kind of matching up to where the market start turning, and it was low. It was down here at the low, and still working its way up. So when we're looking here, where we're at right now, it's kind of right at 51, so it's almost in the middle. So there's a chance that this one's going to continue climbing up and hit 50. And here's the problem with RSI. You can sit and fix this until you get your conditions right. Now it looks more like, oh, it's overbought. It's getting close to overbought, and we can go in. The only little indication we can use on this one, there's a little M there. M and W's are letters that you should always try to identify. I'm going to show you a W. Here's a W. It means the market's going to go up. There's a change coming. You don't see it on the chart. You usually see it on the chart, but not far after that, you kind of peel the way up. So, a 5 is for lower time frames, so stick with 14 or 11 on RSI. You don't want to trick yourself into buying when you shouldn't be buying. 14. So I don't feel comfortable going in here and buying this right now, just because the RSI is not showing me that it's completely overbought. Get the fib in here again. So you can always use the fib on a lower time frame as well. If you don't trade on D1, you have to switch down. So let's switch down and see what we see. I'm going to clear up the chart. Alright, so let's switch down to 1 hour and see what we can do. It's a pretty flat market right now, so pulling a fib on this is going to be like worthless, really. In my eyes, it's not a whole lot of value to me. I can obviously pull it from this high to this, have a retracement of 38, but it's not a good swing here. Let's see what we got. Fib on 4 hours. Still sitting at 38. Let's find another pair. USD. Bottom. So we're at 38.2. Clean this one up. I'm going to throw an RSI in here. 14. We're again in the middle of 15 minutes. Let's switch it up a little bit. Now we have to move this fib because we moved up in the time frame. We're obviously again in a consolidation area right here. So we're at, we hit 61.8 and it started to drop down. Now is one area what you could do on odd USD is you could go in here because it turned up here on 61.8. It's sitting in the middle, and let's see if we adjust this one a little bit. If you adjust the RSI, you have to start looking if the patterns matches up. Right? You don't want to sit and adjust it so it fits something that isn't true. So the market turned down here, went back up to here before it turned again, and we're trying to find the overbought and oversold positions, and preferably you want to hit 79 or 80 before you start walking into this. Oversold, overbought. We're down here. We're almost hitting our levels, right? So we could use 8. Still not a whole lot of confidence right now. When it peaked out here, and this might just be the pair that 66 is where usually it hangs around, and you can just put a level right through it and see if it usually turns around there. And this is might be how you have to trade this pair. Is these are the levels. This is terrible colors. When I say you have to trade it like this, every pair is different, like everyone knows, and it can be tricky to trade some pairs versus other pairs. So if you define the levels to be 66 and 27 to represent overbought and oversold, if we look here, right here where it turned here, it turned up here. When it turned down here, it was hitting those conditions. So you got to set up your environment where it represents how you can trade the different pairs. You see it turned up here, did turn, it dropped down, and came back up again. So this is a simple way of using Fibonacci, is just to try to see how big the retracement is. If you have a full retracement back to 100, the drop after that may be very, very little. The smaller the correction is, if it comes down here and then goes up to 23.6 and then turns, the drop from 23.6 down is going to be very, very large. I'm trying to see if I can identify one of those situations on the map here. If we came in here, we had a retracement to here, 23, and we had a drop from here. down to here is 131 pips. And the higher time frame you have, the bigger the drop will obviously be. A lot of people are using this on daily time frame. So if we take it from top to bottom, right now in USD we're sitting right at 23.6, and it hasn't really, it's broken through on this candle but no confirmation candle, broke through but no confirmation candle. So this is a strong area of resistance. And when you look over here, we see that it has acted as support before and resistance, and that's basically what that Fibonacci is showing is a support resistance line. And if we pull another one down here, we see this is where it turned back in January 2014. So this could be the end of this run of this pair, and then it might sit here and build up volume so then it can take off up, going up again. Take out to go into weekly view. This pair was down 2010. It broke through this level, and honestly I don't think it's going to break through this level because conditions, the market conditions are not what they were back in 2010. So this might bounce and go back up again. It's a pretty strong area of support and resistance. When we pull this whole little line here, we see what's happening. Comes down here, goes back up, comes down. Back in 2010 it broke through, came back in here, consolidated, and then broke through and stayed above it, and have been staying, and came back, hit this line again, this support, bounced back up again. So if we use history as a lesson, it's probably safe to say that we're going to go way up. And now when we take a look at the RSI, we see that it's oversold on the weekly chart. So now is probably a good time to enter long on USD, going back up. We could have been early on this trade around here, which would have been on this candle here. But this is a good entry right now. The first level would be right around where it came out. So if you enter here, if we enter today, we'll take about 149 pips before it starts hitting the next support resistance, which is right around 38.2. Then at 50, there should be another support resistance. So if you pull a line there, and it's pretty accurate, right? So that's all what Fib is doing, it's just showing you support and resistance. These are areas where support and resistance have happened before. So while the tool is really neat to give you, a quick answer on where support and resistance without really drawing them out, my feeling is that you can take away the Fibonacci and start doing what I've been showing you in the past lessons. Just draw your support resistance lines where the line has been touched at least 2 times. And then when you start drawing out a Fib, chances are that they're going to match up pretty close. And what Fib shows you is the areas where it happens most of the time. As you see, it's 61.8. It's happened before. So that's a good way of kind of knowing, okay, at these different levels, certain things usually happens. And either they go into consolidation or they turn around and continue down. And it's all about look to the left and you will see what happened in the past, right? where we're at right now is this big long green bar, which is a consolidation area. History tells us, right now, history tells us that there should be a break up, not down. We saw that on the weekly chart. Come down, bounce up, come down, bounce up, down, up, down, up. So it's a really, really strong support level where odd USD is. So there's your signal. Put a long trade. And then the question is, where do you put your stop loss? Well, usually put it below the last bottom. And if you're doing a short, you put it above the last top. So in this trade, we would put our stop loss somewhere around here. And then we would just sit and take the trade, follow it up, and move our stop loss. Questions before we go on? This is pretty simple. It's not that rough and hard.
Oh.
Questions? You guys still hear me? Okay. If you don't ask any question, I'll assume you all got it. Brian, can't you see my side languages? I've been chatting away with my hands all day long. Money flow index, same thing. Overbought, oversold. I personally like the money flow index because it is exactly that, money flow. Right, overbought and oversold. I can see a question. Stochastic is over. What do you mean, Tiago? Stochastic is over what? Yeah, stochastic is oversold as well, and money flow index is oversold as well. There's a little W. Things are about to change, and they are. And then when we look at the candles, exhaustion. When we look at this, we see that this is a very, very strong support. So going short here might be a mistake. If you're going to go scalping on it or going shorter time frames, it's possible that you could, but when you switch down and you start drawing a trend line, you see this little trend line that I just pulled? See how that's holding? Oh, whoops. Holding, holding, and holding. And everyone that knows me would say SSBO, stair step breakup. So this is, it's going up the stairs, and eventually it'll take off that way. So again, you can use the fib to show you where support and resistance are. Here we're doing a fib on 4 hours, top from bottom. And when you look at these lines, 23, 38, 50, 61, you start taking your tool, matching up your own support resistance line with these numbers, you will see areas of support and resistance. That's all that is. It just shows where certain condition usually happens. There's a reversal, or the trend will continue. That's really what Fibonacci is. So I'm sorry to kind of make it into less fun tool than it might be, because when you take Fibonacci away, we're back to basic. Draw your baselines, draw your support and resistance lines, and you'll be fine. If you want to find out how much strength it is where you're currently sitting, you can do that with Fib. We're sitting at 61.8 on this move. You can see that with your support and resistance as well. Okay, we're going to look at USD JPY as well. Just a second. Let me clean the chart. Yeah, you can have diversion, like my brother's saying. You should look for diversion. I wasn't going to cover diversion today, but I'll show you a diversion. USD JPY first. That was Tiago saying. Okay, USD JPY. Alright, we'll go back to all USD. Kenneth saying there was a perfect divergent. And what are you using, MACD, or what are you using? Oh, you're using them. So divergent is when you have a direction of something going that way, while on your other indicator is going this way. That's a divergent. That means the strength is kind of weakening. Something's about to happen. That's one way of looking at it. That's a quick explanation of divergent. When the price is moving opposite to each other, the indicators are moving opposite to each other. And since we're here, let's throw in a MACD just to see if we can really show up a good example of divergent. Let me just fix up the colors a little bit. Alright, so with MACD, it's, let's get the center line to levels. We'll put one at 0, line through it. So with MACD, in order to discover a MACD, divergent of MACD, what you need to have is, you need to have a MACD indicator that shows the histogram. This is a histogram. And in order for that to happen is, we have a low here. So we're going to look for a low on MACD, which we have here. Then we need a deeper low. Actually, I see one here. Let's do this. This might not show. So we have a low here, and we have a low here. Okay, those two conditions are great. And then for a real diversion, MACD needs to cross the 0 line, which it does here. This is the 0 right there, and goes up here, which is in line with this action here. Then what we need to have is, we need to have a new deeper low here on MACD, while the low over here doesn't match up to this. So now, again, we have this line going this way, right? That was a deeper. Actually, deeper. This one actually should have been deeper. Let's see if we can get them. Oh, there isn't really a diversion here. Sorry. So I'm getting excited. Let's change those colors. Let's see. Let's see. These are pretty similar. So there's no divergent here. I'm going to explain the concept anyway. So we have a low here. What we needed for a true diversion is we needed the next low on the chart, if it was this one, we needed that to be deeper than this one. Everyone with me so far? So we have a bottom here. The next bottom needed to be deeper. Everyone with me so far? Okay, good. Alright. Then, for a true diversion, the opposite needs to happen on the MACD. So we have a low here. Okay, that's our first low. Then the second low on the chart, which should have been deeper, should be shorter on the MACD. So now I'm drawing some fake boxes on the MACD here just to kind of display how it should have looked like. So we had the bottom on the first MACD wave here. Then we pretend we had a bigger dive on the chart, but the MACD showed a smaller dive. Does that make sense? You guys following me? I'm going to try to find a good short here. Okay. And I'm going to try to find a real one, but so if the dive on the MACD is smaller than the previous dive on MACD, and it did cross the zero line, then you have a true diversion. That means that the power of, in this case when it's down, power of the bear is starting to become softer. It's starting to run out, and you should expect a trend change. That means that when that happens, it should start flowing the other way. Let's switch this up on. There's nothing in P1. Let's see H1. Let's see if we can find one here. Trying to find a good diversion picture. But you can also take the simple approach if you don't use MACD. Like my brother was saying, Kenneth, if you use the, let's take MACD, because I can't find anything, and it's Friday, so you shouldn't expect to find anything Fridays. Okay, so H4 odd USD, again, simple diversion, not 100% true, but good enough. We have the price action on the chart going one way, which is starting to go up, which is also referred to as SSBO, while on your chart, on your indicator chart, it's going the other way. So when you pull this trend line, you see how the prices or the lines are diverging away from each other. That means something is changing. So the downtrend is starting to change. And therefore, going long right now would be a good move. So we could take it from here and go down to scalping if we wanted to. We know that the trend is kind of changing, so it's a bit iffy right now. But we can do what we did before. We can start using Fib here. Again, using Fib on 5 minutes, it's like crazy. It's always going to give me support and resistance. So if we do that, we'll just start doing those things that we did last time. Find good entries. Here's a trading channel. And then switch down to 1 again, right? And do your trading. But doing Fib. Brother just sent a picture. Alright, so here my brothers, I hope everyone can see the screen. Here's another diversion. Again, you have a higher high, but on the chart, but on the indicator, you have a lower high. So again, you're looking for that diversion sign, right? You're getting a top while you don't get a top on the indicator. So the strength is falling out. There's no more strength, and you could expect it to change. And the second candle gives you the confirmation. And this is the second red candle, shows you that things have turned. Again, these are things that you can use, but again, let me see. Second candle give me go short. Dark cloud pattern. The second is the confirmation. Yeah, or yeah, dark cloud pattern. Hopefully, my brother will throw up a live event and show dark cloud pattern. Because right now I don't trade the same way with those things. So the only dark thing I see here is the background of this picture. That could be a dark cloud. But looking at this candle, what my brother's showing here is it's a good diversion. Again, indicators going to tell you things way too late. By the time you see this diversion, the change has already happened. You draw this line, you get your first candle with a wick. Well, let me tell you something. That red first candle at the top, while it's not the best pin bar, it is a pin bar. Body closed with inside of the previous candle. It's a pin bar. You should have entered right at the close of that candle, and you would have been in before anyone else would have been with an indicator. Because the indicator down here didn't happen until the third candle. And then you would have entered. By then, I've already bought my flight ticket to some sunny island, put out the sun chair, and all that kind of jazz. So indicators are good on higher time frames when you have time to sit and wait for a good profit. But you don't really need them. But they can help you confirm certain things. Like right now we're on D1 on AUD/USD. We're in an overbought position, so right here we're in overbought. Is it gonna drop? Well, if it is, it ain't gonna do a whole lot. It's gonna probably swing between there and there, because we already know that this channel is extremely strong. So what we can do when we're sitting here, we are overbought. We know there's too many people buying, so it should drop. So we've identified that. What we can do here instead is we have a trading channel. We start going in here and seeing where we at that trading channel. Okay, we have a double top. We have a big strong wick here saying the bulls are all exhausted. We have a feverish attempt here to try to break this little support line that is resistance. Sorry, it's really, really strong. And we could probably take a short entry here and go down to where we go right there. What's that? If we daring, we'll take a trade. We'll take 50 pips here. We start getting word around 21 pips. We break through 21, 25 pips, just because it happened before. Then we'll wait for the next 25. Let's see. So my brother says you can also look at the wick. They're telling the sellers are coming in and buyers are losing strength. Many times when support or resistance broken, he gets to revisit and continue the current path. Yep. Again, when you start drawing your support and resistance, you got to look for a candle breaking through. Let's look at this. We have a breakthrough here. This is the candle breaks through. Everyone goes crazy. They go long. Mistake. You didn't wait for the confirmation candle. You don't have a confirmation candle. The next candle is a bear candle, and guess where he went? The bear went into the woods. took you with it. So you got to make sure your support and resistance lines are drawn out. Of course, you can use Fibonacci. It'll help you, but look, I'm putting this Fibonacci at the bottom of this wick and at the top of that wick, and you see how the support and resistance lines are lining up. That's all you get from Fibonacci. So draw your support and resistance, then pull a Fibonacci and see if they match up. If they match up, you've done a really good job. Now sit and wait right at those different levels, 23.6, 38 to 50 and 61.8 and 70, 70.2. Those are the key levels. And if you draw on your support and resistance line, they should pretty much match up. And it just confirms that you're doing a great job. And that's all you really need is the support and resistance. Check them out. Keep practicing them. Because they'll take you from, we can take from H1 all the way down to M1 like you guys saw last week. We took almost 20 trades last week, but we started doing support and resistance on 5 minutes, went down to 1 to 20 trades. Every one of them was successful. So Fibonacci is not something magical. Unfortunately, it's become magical because everyone thinks it's the solution to everything, but it really is support and resistance. That's all. Do your support and resistance lines, then throw Fibonacci in there. Confirm that your support and resistance are truly accurate. And just to show, I mean, you can be completely off your rockers. Let's say I do my support and resistance just putting a blindfold on and having no clue what I'm doing. Let's see. So I do got 2 support resistance. Let's see what they match up to. Let's do this. Let me remove this. Change the color. I'm just going to show you that that's all that is support and resistance really. But it's Fibonacci shows you areas where things usually happen. So I threw 2 support resistance line in just on the mofo, and the first one was not too bad, hitting right around 23.6. The next one, I guess it's in my blood, it's at 61.8. My point is, if you put a support resistance line in between 61 and 50 and you don't have it, you don't have any price action around your support resistance line, you're doing something wrong. And if you look at 61.8, you see that there is a lot of things happening here. Same at 50, and same at 38.2. Sorry, I just got a cough for a second. Sorry about that. High points. Sure. Sorry. 23.6, 38.2, 50, and 61.8. Those are your high points. Those are the ones you want to pay attention to. So when you pull out a fib, those are often the areas where you see things happening. When you say Lumiere, when you say which, what do you mean? Which one is the strongest one? which one more popular for price to revisit? Usually 50 and 31.8 or 38.2. I mean, sorry, going absolutely banana here with my cough. Usually 50 and 38.2 are where things happening most of the times. That's where you always see a lot of action. So those are the two things that you should be looking at. So if you have a price correction up to 50, one thing that a lot of traders do is that they start setting sell stop at 38.2, 23.6, and at 0. Okay. So again, 38.2 and 50 are the most common areas. That's where things are happening most of the time. It does go up to 61.8 as you can see on the chart, but 38.2 and 50 are the areas where you should start looking at putting in your sell stops. So if your price action right now as it sits on this chart on USD is at 50, I would start putting trades in here at 38.2, at 23.6, and at 100, which is 0. That's a common trading style. So right now I have 3 sell stops, and where could I expect them to go? Not a whole lot longer than down to 86.58.3, and then cash it out. But if I get a move here, that's probably what's going to happen. It's going to fall down to 0, break 0, come down and bounce off a really, really strong support resistance line, which is it's going to act like support. And I would cash out everything I have at 86.58.3. You take profit when you hit 50. Your reverse action would be there's a way to configure this Fibonacci to draw out how far down it will fall, and let me see if I can get that up real quick. Oops. I'm just right now I'm just looking through my ini file to see if I can modify my Fibonacci. Draw back, we have expansion description 2%. Let's see if we do this. Just going to see if I can do this. Which one am I using? Probably using this one. Sorry about this. This is more than I was planning on showing, but we're here. We might as well do it. Alright. Let's see if we can get my fib to show a little bit different. I'm going to close this one. Let's see if it does it. It doesn't do it. Let's see. Fibonacci expansion. So, you don't see right now. Delete that. See if we can do this. A Fibonacci extension is pretty much what you're looking for. If I have top and bottom here, and I want to see how far down this reversal can go, it hit this level, which to me looks like a 61.8. Let's see what it is. Right there. Where's the bottom? Right there. It's almost a 70. So from drawing like a wounded animal. So we broke 61.8, and then it started going back down here. And here, extension 61.8 is what we could have expected. When it hit 61.8, we could expect the extension, which is it continues the pattern, to be at least a 61.8 extension, which obviously it did. As you can see, it hit that one without a problem. It broke through that like crazy. If we now do an extension on this one here, from here, fib on this, we had 23.6 Fibonacci. Let's see how far down that would go. Oh, 23.6. It's down below the map, according to this. We can't even see it here, so not a clear good sign with that. I used to be able to have my Fibonacci draw how far of a drop it would be. When I did this, I got the reverse map on the other side, and it told me where to take the TP. Now the thing is, you can measure up. Yes, measure up how far down, how far of a break this was. Put your box at the bottom. There's your TP. There's your first take profit. So if you enter at 61.8, you should take profit in 92 or 94, which is right on a support level, which is a good area to take it, right? Again, Fibonacci sounds really fancy. Nothing but support and resistance. So sorry to break the bubble. What if it goes up higher? After you trigger your first sales? Yeah, spikes are common. So if, so if it kicks in and then it reverse on you. So if my sales stop kicks in here and then it goes higher, well, that's what stop loss is for. This, no, sorry, I can't give you a fancier answer than that, but you have to account for swings. So right, this trade that I have set here that's about to kick in shortly, my stop loss on that would be, remember what I said, above previous high, which is this, then 10 pips above this. So 58, so we'll go up to 69, 68. Stop loss at 88,209 for this baby. Take it. Point. What's that? 809. I'm missing something. $88.2. Okay. $68.9. Way higher than I want it. I want it there. That's my first stop loss on that trade. I'm doing the same on this one. I would put that at the same place. But I will actually put that right here. So yeah, spikes are common right now, so you have to, when you put, I put stop losses and everything, apart from when I'm scalping, so I hope that answers your question. When I come down to this trade down here at the bottom, just because I know it's so close to absolute bottom, my trade, when it kicks in here, I guarantee you we've seen 1 or 2 spikes, and my stop loss would be above previous spike in that case. Does that answer your question? Okay. There's one thing I haven't shown, and that's where you can start doing harmonic patterns with Fibonacci, and that's where things are starting to become a little bit more interesting with Fibonacci. But as a base, Fibonacci is nothing more than support and resistance, really. It identifies areas where things are most likely to happen. And that's really what Fibonacci is. And it's just a mathematical formula that adds 11 on top of some key pivot numbers. So nothing super fancy, but it works. It does identify those areas. And as we've seen, when we do pull it from wick end to wick end, it does identify those areas that are really, really interesting. So if we look at 23.6, we see that this area is an area where things are happening. Same with 38.2, we see things are happening right here. So that's really what Fibonacci is good for. And if you then throw in an indicator, when you trade with indicator, it helps you to see, okay, we're at close to oversold, overbought, so most likely something will happen over here, making a big fat box here, right there, and right here. The conditions are ideal for a short entry. And when you start looking at the candles, you see long wicks, means exhaustion, and you can go short. So that's what you can use Fibonacci for. Draw them from top to bottom, but if you draw them from wick top, then you got to draw it to wick bottom. And then that should give you some interesting areas where things are likely to happen, and that's why you need to start looking for. But it doesn't mean just because the candle is sitting bouncing off of 50 that you should trade right there, because it could very well shoot up if you don't put an indicator like money flow index or RSI or MACD. It doesn't tell you if you are at an overbought or oversold area. Just if we look here I'm trying to find an area where you probably shouldn't have entered. Right here. I'm going to make a bigger, fatter box here. Right? It's tempting because it bounced off of 38.2. It's tempting to say, oh, well, hey, let's go short. Money in the bank. Well, money in the bank, not really, right? Because when we look at the money flow index, we're not at an ideal overbought or an ideal oversold position. So you should sit on your hands here. And I know that's super hard. I still today are unable to sit on my hands all the time in situations like this. But that's really what you need to do. This condition that I just drew out here, that bounced off of 38.2, hit kind of like resistance. A lot of people would have gone in here, and it would have started going down, and people start packing their bags, calling their job, quitting, and ready to take off, just to see it bounce off of 23 and shoot up to 50, and then to 68, 1.8. Well, you entered at the wrong conditions. So you got no one else but yourself to blame. So this is where the indicator comes really, really handy, right? If it doesn't meet the overbought or the oversold, then don't enter. Even if it sits right on a pivot point on your Fibonacci, do not enter. It's not a good entry, and you will probably see your stop loss kick in. It's just as simple as that. So again, Fibonacci, good for high time frames. Use with an indicator. I know me and my brother, we've always advocated not using indicators, and we most of the times I still don't do. But you see, we can. There's a way to trade with indicators. There's nothing wrong with indicators, but they're just lagging, and that's the problem. They will tell you the news 10 minutes after it happened, and not right when it happens. So, but if you learn how to look at the candles, you'll be spot on. So, any questions? How about expansions? I showed expansions. My net. Just enter here again for the third time. Sorry. Okay. Yeah, you can wait for the video. Check my MT and my stochastic. Show me. I checked my MT, my stochastic showed me overbought, but this money flow index, what do you think is better, stochastic, CCI, RSI, MFI? They're pretty much the same. They just looks different. Let me delete this money flow indicator and throw a stochastic in here. They're all oscillators, right? So they just basically tells you the same. Overbought and oversold. And then there's numbers that you can use. You see if I can do this right now, everyone see my screen. It looks terrible. But anyway, follow my concept here. Whenever the green line, which is part of the stochastic measurement, crosses through the red line, you can go long. If it crosses from under and goes up, you can go long. You don't even need a chart. And when it crosses from above through the red line, you can go short. You don't need a chart. You're not going to be doing a perfect entry, but you can trade just with this indicator, the way I'm showing you on the screen right now. Nothing wrong with it. You won't exit or enter at the most perfect places, like here it probably turned. You should probably gotten out way sooner than this one told you. You would have got out here. You were long and then you got out here. So you can trade on it. You just got to fix these values. You don't need a chart, but you will come in too late and leave too late. So stochastic, RSI, CCI, all those things are the same. They show you conditions where it's either overbought or oversold. And you need to add those levels in here. 20 and 80
or 79 and 21 are the areas which shows you, okay, market is in an area where they overbought or they oversold. Now start looking for changes. MFI does show you overbought and but this MFI not show me overbought, but the stochastic, yeah, for sure. Actually, let's throw the money flow in there again, just to, we'll throw it next to it. Money flow index is a volume indicator, not oscillator, acting a little bit different. But as you can see, they're fairly spot on as well. They identify. Now my numbers are different. On MFI I'm using 8, and on stochastic I'm using 10. So it's all about what your numbers are set. Take a look at the chart, work the numbers on your indicator so it matches up with your chart. Right? There's oversold on MF, and it's there on stochastic, and is it there on the chart? Well, it's still going down, they're still selling, but just because you see that you're in the oversold area doesn't mean, oh, cash out, drop out, take long. Now wait for the candles to change, right? So you're in an area where it's oversold, so it's not going to drop a whole heck of a lot more. Start paying attention. There's something that's going to change. So now you pay attention to your indicators. They're starting creeping up, trying to get out of the oversold area, and the candles are starting to match your indicator. And then you go on. So MFI, stochastic, RSI, whichever you want to use, you can go ahead. MACD is fine as well. If you're going to use them with Fibonacci, do not use Fibonacci by itself. Only if you're looking to identify support and resistance lines, but don't trade it based only on things hitting key points, because you see several areas where I showed you, you think it's gonna, okay, hit 38.2, let's go short. You were in the wrong area, you're at the wrong timing, and you got burned. So use an indicator if you're going to use Fibonacci. But again, the best thing to do is draw your support and resistance and study the candles. That's really what you want to do. Start looking at candles, start recognizing the candles. When you start seeing long wicks, things are about to change. Long wick, they're exhaustions. Here, stop hunt. Long wick, exhaustions. Look for the wicks. They will tell you a lot. They will tell you that things are starting to change. Then throw an indicator in there and see how it looks. Are you at overbought? And are you truly at overbought? Or are you just in the middle? Alright, so right now the trade that I have set at a Fibonacci level is actually going to be smack in the middle of this money flow indicator, but it's okay because I took the trade when my indicator was set to 8 and it had come up to overbought position, so I'm okay with that trade. I do believe it's going to go down. My problem is my last trade at the bottom at 100 is probably going to be very close to oversold. So I shouldn't expect a whole lot of pips out of that one. My last trade, if it kicks in, I'm just going to take 10 pips and be happy and get out. again, just because we've seen that absolute bottom is right there, 85, 65, somewhere around there. So anyway, that's as much as I can say about Fibonacci without starting involving harmonic patterns, which I'm not going to do right now because it is complex and complicated, and you don't need to do that right now. Start using Fibonacci, start looking at what it shows you, and it does show you support and resistance. That's what it does. Use that together with an indicator and try to take some trades, but don't go below H1 time frame, hourly time frame. Trade from 1 hour and up to a month if you want to. The higher up you go in time frames, the longer your trades can sit, but you also have to have fairly large stop loss settings to allow for swings. Okay, so that's pretty much it. Any other questions? Triangle. Who's that? Any other questions? Otherwise, we're gonna stop this recording and reading. And shout out to my brother Kenneth, and hopefully he can show us dark cloud trading one of these days. My pleasure. Thanks, Brian. Thanks, Lemire. And thank you, everyone. Hopefully you guys learned something. It's not as fun as it was scalping because we took a lot of trades there. So here we have set a couple of trades. I'm going to leave this trade sitting, so if they kick in, they kick in. If they don't, they don't. But I'll post them on the group again. So if you have any questions, just shoot them over to me and I'll be happy to answer them. Alright, take care. Bye-bye.